Friends, in this video for ITHOUGHTWEALTH, I am going to talk to you on the topic, the disappointment continues. Over the weekend, we had 5 marquee companies come out with their Q1 numbers. The market's response to them on Monday was clearly underwhelming. The markets approached this result season with a lot of optimism. Though we knew that inflation was very high, companies were struggling to pass on inflation to their customers, interest rates were threatening to rise, companies were needing to deploy more capital in their business, businesses were throwing out less free cash given the inflationary nature of the entire business environment. We knew all these things. It was no surprise to us, but we travelled into the result season with high expectations. Somehow, domestic investors have been optimistic and persistently so in this year. This is in stark contrast to how FIIs have viewed India. They take a view which is very different from how we form our view, and they have been pessimistic or cautious in the best of Indian companies. Some of these Indian companies have come out with their Q1 numbers over the last fortnight, and clearly now it is our turn to be disappointed. So the domestic investor is basically not liking these numbers that much. We factored in all the good news and we probably didn't factor in all the bad news. So when companies come out with results, some of the things that we thought would happen don't seem to have fallen in place. So the results are a bit underwhelming and we are forced by these results to revise our opinions on the best of companies. Now, this is a very difficult job for investors because we believe that big companies generally don't let us down. But now it appears that our expectations are running so high and what we want out of these companies is so aggressive that the companies, despite coming out with decent numbers, seem to be falling short on our expectations. And naturally, our response is going to be one of disappointment. This reaction is more a knee-jerk reaction to the results. After a few days, we would probably need to go back to the drawing board and revise our expectations on these 5 marquee companies which came out with results over the weekend: Infosys, ICICI Bank, Kotak Bank, JSW and Reliance. Now these are very big companies and they'll probably come up with better responses to the business challenges that they are faced with, and over the period of several quarters, we'll probably see them overcome these temporary challenges which they are facing in the first quarter. But the markets have expected a lot out of them and naturally the first reactions are going to be more on the side of disappointment. So how will the markets decide? We'll see a lot of retail investors who have built up positions based on these result expectations take their money out of these stocks, or they would average and buy more. So we don't really know how the mood will go in companies which have disappointed the markets in this first quarter results so far. But there is another set of companies. These companies are yet to come out with their results. The markets expect them to disappoint and expectations are running low, and if some of these companies are able to come up with better performance than the market is estimating, then analysts may take a positive view of it. So far, if you look at the companies where expectations have either met or exceeded, I can only see one company, which is ICICI Bank, which seems to have done decently. As far as all the other marquee companies are concerned, there are clear points of concern for investors and very clear areas of disappointment. So, as we go forward, the next set of companies will be closely watched. I believe that where expectations are running high, we are headed for disappointment, and the only place where we have scope to feel good about this quarter number is where our expectations are running very low or we have very limited expectations. So, earnings surprises are unlikely where expectations are running high, and earnings surprises are only likely where expectations are running low. In that sense, this quarter is going to be a time when investors may have to reset expectations down where they are running high and kind of take the expectations up where they are very low. This is a reset hour, and all of us must look closely at every result and understand what needs to be understood. Take a view which is fresh of these companies, factor in the current adversity for at least 1 or 2 quarters, and revise what we think should be a reasonable estimate of the company's performance for this year. From an analyst point of view or from a learning investor point of view, this is an exceptional phase because there will be so much of learnings from these results, from how the industry reacts to these results, how analysts react to these results, and how retail investors react to these results, and lastly how institutional investors take a view after the results. Essentially, a great phase to learn, a great phase to observe behavior, a great time to shape up our own behavior for the future, and a great time to build robust portfolios with the best of companies for the future. So that in essence is what the result season is signaling so far. In the coming weeks, we will again take stock of results which come between now and then and form a better view of how this result season is going to conclude. Thank you for watching this video.